Hello everyone, before starting video, important information. This video is AI generated and created purely for informational purposes. Welcome to Infotech Stocks channel. Today, we're diving into the world of stocks with some exciting price predictions for the year ahead. We're talking big names like Meta, Amazon, PDD, Micron Technology, and Shift4 payments companies on the cutting edge of tech. Now, I'm not a financial advisor, but these stocks have analysts buzzing with some pretty bold price targets. This is just me, your friendly neighborhood finance enthusiast, breaking down these predictions and exploring the potential of these companies. If you're as excited about stock analysis as I am, and want to stay ahead of the game with the latest forecasts, smash that like button and drop a comment below with your own predictions for these stocks. Let's dive right in. Alright, let's kick things off with Shift4 Payments, trading under the ticker symbol 4. This company is making waves in the payment processing industry, and analysts are taking notice. They've set an average price target of $100.08 for 4, but here's where it gets interesting. The high estimate is a whopping $120, while the low sits at $48.91. That's a pretty wide range, right? It just goes to show you the kind of growth potential analysts see in Shift4 Payments. Shift4 Payments is a dominant player in payment processing, providing businesses with the technology they need to accept all those credit card swipes, online transactions, you name it. They've been quietly building their empire, securing partnerships with major players in the hospitality and restaurant industries. Think about it. Every time you tap your card at a restaurant or check into a hotel, there's a good chance Shift4 Payments is working behind the scenes. And as more businesses embrace digital payments, Shift4 is strategically positioned to capitalize on that growth. But it's not all sunshine and rainbows. The payments industry is notoriously competitive, with established giants and scrappy startups all vying for a piece of the pie. Shift4 Payments needs to stay ahead of the curve, constantly innovating and adapting to the ever-evolving landscape of digital transactions. That's why we're going to keep a close eye on 4's progress throughout the year. We'll be watching how market news, earnings reports, and those competitive developments impact their stock price. We'll revisit this prediction periodically, see if it's aging like fine wine or if we need to make some adjustments to our outlook. Next up, we're diving into the world of Meta Platforms, the company formerly known as Facebook. Meta has been making headlines with its ambitious metaverse plans, but the question on everyone's mind is, will it pay off? Meta's currently priced around $591.70, but 42 analysts have spoken, and their 12-month forecast suggests an average target of $632.69. That's a decent potential upside of about 6.93% if those analysts are on the money. But here's the catch. Those predictions range from a low of $360 to a high of $811. That's a massive spread, folks. And it reflects the uncertainty surrounding Meta's big bet on the metaverse. Now, I'm all for innovation, but even I have to admit that the metaverse is still a bit of a mystery. Will it be the next big thing, or will it fizzle out like Google Glass? Only time will tell. Analysts are laser-focused on Meta's advertising revenue, which has taken a bit of a hit lately. Meta's bread and butter has always been targeted advertising, but with increased privacy concerns and Apple's iOS changes, it's getting harder for them to track our every move online. But let's not forget about Meta's other ventures. They're still the kings and queens of social media, with Facebook, Instagram, and WhatsApp, and their investments in AR, VR technology and AI development could be game changers down the line. So, is Meta a buy? Well, it depends on your risk tolerance and your belief in the metaverse. If you're bullish on the future of virtual reality and think Meta can overcome its advertising challenges, then this could be a good long-term play. We'll be tracking their news and earnings closely throughout the year to see if they can reach or even exceed that $632 price target. Amazon, AMZN. Can the e-commerce giant keep delivering? Let's move on to a company that needs no introduction, Amazon, the e-commerce behemoth that's become a staple in our lives. I mean, who hasn't gotten addicted to that two-day shipping? But with Amazon's stock currently trading at $210.05, the question is, can it keep climbing? 45 Wall Street analysts have put their heads together, and their 12-month average price target is a cool $238.35. That's a 13.47% upside, which isn't too shabby for a company of Amazon's size. Of course, those predictions range from a low of $197 to a high of $285. But what has these analysts so optimistic about Amazon? Well, for starters, Amazon's cloud computing division, Amazon Web Services, or AWS for US cool kids, is a cash cow. Businesses are moving their operations to the cloud faster than ever, and AWS is leading the charge. Then there's Amazon's relentless expansion into new markets. They're not content with just dominating e-commerce. They're also making waves in healthcare, grocery delivery, and even space exploration with Blue Origin. And let's not forget about the holiday shopping season. Amazon rakes in billions during the holidays, and with inflation easing up, consumers might just open their wallets a little wider this year. So, is Amazon a buy? If you believe in the long-term potential of e-commerce, cloud computing, and Jeff Bezos' ability to take over the world, then adding Amazon to your portfolio might be a smart move. PDD Holdings, PDD, the rising star of e-commerce. Now let's talk about a company you might not be as familiar with, but one that's making serious waves in the e-commerce world. PDD Holdings, trading under the ticker symbol PDD. This Chinese e-commerce giant has been quietly building its empire, and with a current price of $120.57, 14 Wall Street analysts have given it a 12-month forecast of $168.99 on average. That's a whopping 40.16% potential upside, folks. Now I know what you're thinking. Graham, a 40% return? That sounds too good to be true. And you know what? You're right to be skeptical. Investing always comes with risks, and PDD is no exception. But here's the thing, PDD has a few things going for it that have analysts excited. First off, they're tapping into the massive and rapidly growing Chinese consumer market. We're talking about billions of potential customers with a growing appetite for online shopping. Second, PDD has differentiated itself from the competition with its unique social commerce model. Think of it like a cross between Groupon and Pinterest, where users can score deep discounts by shopping with friends and family. And finally, PDD is expanding beyond China's borders. They've launched their platform in other Southeast Asian countries and are even making inroads into the US market. Of course, investing in Chinese companies comes with its own set of risks, from regulatory uncertainty to geopolitical tensions. But if PDD can navigate these challenges and continue its impressive growth trajectory, it could be a big winner for investors. Micron Technology, MU. Riding the wave of the chip shortage? Last but not least, let's talk about Micron Technology, the memory and storage giant that's been making headlines lately thanks to the global chip shortage. With Micron currently trading at $111.90, 25 analysts have given it a 12-month average price target of $146.28. That's a solid 30.72% potential upside, and it reflects the crucial role Micron plays in the global technology landscape. See, Micron makes the memory chips and storage drives that power everything from our smartphones and laptops to data centers and self-driving cars. And with demand for chips skyrocketing, Micron is in the driver's seat. The global chip shortage has highlighted just how essential these tiny components are to our modern world, and Micron is one of the few companies with the capacity to meet that demand. But here's the thing about the chip industry, it's cyclical. Periods of high demand and soaring prices are often followed by periods of oversupply and plummeting prices. So, while Micron is riding high right now, investors need to be prepared for the inevitable downturn. That being said, Micron is making smart moves to capitalize on long-term growth trends. They're investing heavily in new technologies like artificial intelligence, 5G wireless, and autonomous driving, all of which require massive amounts of memory and storage. So, is Micron a buy? If you believe the chip shortage will persist and that Micron can continue to innovate and adapt to the ever-changing demands of the tech industry, then it could be a worthwhile addition to your portfolio. The future of tech. Your predictions? And there you have it, price predictions for Meta, Amazon, PDD Holdings, Micron Technology, and SHIFT4 payments. With so much going on in the stock market, from inflation worries to geopolitical tensions, it'll be interesting to see if these stocks hit their targets over the next year. I'm curious to hear your thoughts on all of this. Do you think these companies will reach their price goals, or are those predictions too optimistic? Drop your thoughts in the comments below. Thanks for tuning in, and if you enjoyed this analysis, don't forget to subscribe for more updates and stock predictions. See you in the next video.